Germany's finance minister and China's vice premier have used a meeting in Beijing to agree to try and strengthen economic ties and ease trade tensions that have been growing in recent months. Now, the world's number 3 and number 2 economies have found themselves increasingly at loggerheads, even as many of Germany's car makers and big industrial companies rely more heavily on China for their profits. But Berlin is increasingly worried. It says Chinese firms benefit from heavy state support and can undercut German companies, while Beijing tightens its own export controls. Here's a little of what Lars Klingbeil had to say after meeting Chinese Vice Premier Lifeng.
I received assurances from the Chinese side that German and European concerns about export restrictions on rare earths and critical raw materials are being taken seriously, and that we want to find joint solutions that ensure reliable access and reliable supply chains. We also discussed overcapacity in key sectors such as steel, solar energy and electric mobility.
We hope that German side can leverage the influence and leading role as the core members of the European Union to push China and the EU to move towards the same direction so as to properly resolve economic and trade frictions through dialogue, build an open and cooperative international economic environment, and jointly resist unilateral bullying.
Well, we can get more on all of this with Gregor Sebastian, an expert on economic relations between Germany and China at the independent research firm Rhodium Group, and he joins us live from Berlin. Gregor, let's start with this. What are you hearing from German companies on the ground in China? Are they worried or are they adapting? Because China has for a long time been a huge cash cow for some of them.
Hi, Michelle. Yeah, I think we're hearing both. I mean, they're absolutely worried. You can see that if you just look at the recent financial statements, right? Just looking at the big German car makers, most of them already starting last year have had to issue several profit warnings, not just related to US tariffs, but increasingly because of their deteriorating position in China. On top of that outlook in the Chinese market, you now have the concerns that Chinese competition is also going to be an issue for them in third markets and at home. And that China, as we also just heard in the clip you played, has that leverage over intermediary components and raw materials that could really lead to production stops, including in Europe.
So what is the answer then? I mean, is it more de-risking and moving further away from the Chinese, or, as we're seeing today with these talks, is there an attempt to kind of knit closer together?
I think we have to look at that from the company perspective and the government's perspective, right? As a company, a lot of the firms actually saying we need to invest more into the Chinese market, and that is de-risking for us because it basically shortens supply chains and means that if there are additional trade tensions, well, you know, that sort of China market is more isolated and we can still continue to operate there. Looking at this from the government's perspective, or also from the Europeans' perspective, de-risking is more about striking new trade agreements and also potentially using more trade defense instruments. I think so far the German government has been a little bit more concerned about the potential effects, what that could have on the bilateral relationship with China. They're concerned about retaliation. But I think as we are seeing that China is more coercive in terms of using some of its own leverage points, that discussion in Berlin is definitely accelerating as well.
Yeah, I mean, what options does Germany have if it does want to curb Chinese competition without hurting its own exporters?
It's extremely tricky. I think in the short term, they're definitely looking for a truce, right? A truce in the sense of getting those raw materials back into the markets where they're needed, because frankly, for the next 5 years or so, there's no way that Germany can produce certain minerals or refine them without China. But in the long term, I think there are now discussions to invest more at home and with partners. We just had the meetings in Canada at the G7 level. There are efforts underway to diversify jointly within the G7 and also other like-minded partners. There's also talks about potentially restricting access to the European markets. The German government has just announced that when we look at 6G, right, Chinese providers are no longer welcome on security grounds.
Gregor Sebastian of the Rhodium Group, thank you so much.
Thank you.